Has released financial results showing its businesses collectively grew earnings by 5% in the 6 months that ended in December. FirstRand, of course, the parent company of First National Bank, FNB, Westbank and Rand Merchant Bank. For its part, FNB helped profits and the bank gained even more customers. However, this came with an increase of more than 900 million rand in credit impairments, meaning people can't pay their debts that have to be written off. The group said the coronavirus outbreak is expected to result in supply chain disruptions, while individual consumers and companies will be under even more pressure. To discuss, so we're joined now by FNB CEO Jacques Celliers in studio. Great to have you with us, Jacques.
Thank you for having me.
So firstly, let's start with FNB. What does the coronavirus mean for you?
Well, there's so many things playing out at the moment. We're not quite even load shedding at the moment is quite a challenge.
A recession as well.
Absolutely. So I think before we go into trying to understand coronavirus, obviously that's another element that has to take some time to blow through the global markets.
Yeah.
We're hoping that it'll be resolved sooner, so there's more certainty in the model, and certainly the globe has been dealing with it for some time. So we're hoping that the momentum will actually get some answers sooner, because if it drags out too long, then clearly the impacts are bigger.
Yeah.
So we hope it'll actually get some clarity sooner.
But I mean, are you worried about the implications for banks specifically? In the first few days, it emerged that somebody had come back from Italy, had interacted with a Nedbank employee. Does that give you sleepless nights?
No, well, I guess we all are challenged with what are the impacts for us. And so clearly from a health perspective, that's the most important thing, is to look after our customers, our employees, and where those impacts hit us, then clearly we have to respond, but also to be calm. You know, like I think there's no winner here in I guess overreaction and actually getting us into deeper challenges and trouble. So I think all of us have to be calm here. We have to go through and get the experts to lead us around the journey. So it's tough times.
And you don't know what it means in terms of your growth. So FirstRand experienced a slowdown already, I think, before coronavirus hit, and that was part of the FirstRand depressed results 2020, the start of it.
So we're quite pleased actually with our results for the first 6 months.
Okay,
although
so
it's lower numbers, but you know, it's tough out there, and for our customers, we have just over 8 million customers, and for them, they're quite a stable client base. And the client base certainly has demonstrated resilience to try and create some value. We had 8% growth in transactional volumes off a GDP of close to zero.
Yeah.
And so it's meaningful volumes, but it's slowing down. And I think that's not a new thing. It's not Corona's fault. It's just been a gradual slowdown for some time.
Well, were you surprised by the recession announcement, by the contraction that was much bigger than many had expected in the fourth quarter? Or were you seeing that in sort of what was coming through?
So I think over the last, let's call it 2-3 years, we could see the data pointing every time to disappointment. And it was just going deeper and deeper into disappointments all the time. Fortunately, global growth was still helping us a bit. You know, so we could get away with our little domestic challenges, if I can call it that. But certainly now the movie has changed. There's a different expectation for global growth, and as a consequence of that, we'll have to, somehow do some magic here to get our local issues dealt with, so that we can create and stimulate some local growth. And I think our job as banks, and it's not just FNB, is that we must play our part to keep the lights on, right? So we can't now go and say, let's find reasons not to lend. We are out there in the business to try and stimulate demand and to keep our businesses going.
Well, I was going to say, your impairments have increased, card impairments by 77%. Does that mean, firstly, that it is going to actually become harder for ordinary South Africans to take out credit?
Yeah. So if you look at our client bases, we've got customers who can get more credit and customers who mustn't get more credit. And that depends where the impacts of the economy is going to hit the hardest. And that's equally relevant in the commercial segments as it is in the consumer segment. So we are out there, we're looking for opportunities, we're helping our clients. What we do find is that clearly they are, over the years of tightening belts, this extra additional complications of the global impacts are now obviously just adding to the challenges.
Yeah.
But like the banks, we've been around for a long time.
The question is, are people going to struggle to take out credit?
They're going to struggle. And I think we are going to look for opportunities. So our growth story at FirstRand is not, and FNB is not necessarily just a credit lever growth story. We've got so many efficiencies, cross-selling value propositions. You saw in our results how we celebrated our insurance value props, our wealth and investment stuff. So we're doing across all the segments, bottom end of consumer to the top end, and same with commercial, We're trying to stimulate growth through platform executions and cross-selling, upselling, and obviously the big efficiency in our platforms.
Are you lending responsibly? I think we've discussed this
Absolutely.
before, for this to happen.
Yeah, absolutely. I think the trick with all of us is to be open for business, right? And now we look for opportunities, and clearly even your good customers can fall into tough times, and that's fine. You know, we like the farmers who go through a drought.
And you said it happened quicker than you expected.
Absolutely. Sort of three elements played out into our bad debts, if you want to focus specifically on impairments.
Yeah.
The first was growth. Normal growth generates increased sort of bad debts as new business train. The second element, as we did disclose, is that we had some operational challenges we got to get through, so we made some mistakes and we owned up to those. And then the third one is these macros have deteriorated much faster than we had anticipated.
Yeah.
So all of those elements come together, but you know, it's still within our ranges. So we're not out of, you know, so it's off low basis, and it sort of gives us a bit of more, you know, sort of things to focus on. But we've got a growth story, and we're excited about the future.
So I'm happy about that, because I was going to say, is the tide going to turn? Are you expecting that? Or is this years of just lower and lower growth rates for FNB? And maybe you can also end off telling me, what is the health of an ordinary South African in terms of finances, credit, etc.?
Yes, I think household credit extension has been sort of muted for a long time, and I think people have got their balance sheets. But the problem is jobs, right? There's growth. There's no growth. Even if your balance sheet's good at home, and you lose your job, there's not much that, so we all have to work hard to keep the jobs going. And a big fear is that the overreaction or wrong reactions as policies would now play out, and people would then, how hard we've been working to create a little bit of jobs. So how are we stimulating small businesses? So our job really is, all of ours, banks and policymakers and, the society at large, is to keep the little businesses going, to keep activity going, and to really look for opportunities of growth. I think the markets globally are going to have new opportunities. As the forces of world trade settles down into new you never know where the opportunities come from. Certainly from a tourism perspective, provided we can get some activity across borders.
Again,
our market has actually got a great investment opportunities there. So I think it's not an ex-growth story. It's just from different pockets, and we're going to have to work hard to find those and keep the lights on.
All right, thank you for your time this evening. And that was FNB CEO Jacques Celliers. And